Hi, Greg Weldon here with the Global Macro Strategy Report for Monday, August 4th. Today, we got a lot to talk about. It's kind of a secular piece. It's called Mission Impossible, Teaspoons of Sand. What we're talking about is the physics related to a seesaw on the playground. How much mass, what are the angles, what's the pressure that's needed to flip the seesaw from one side to the other. All right, in its current phase, we have poured, and it goes back to a Pete Seeger comment, which I'm going to show you in a second. But, it's like, why now? Why all of a sudden? Why does this matter now? We've been talking about debt forever. Well, it's because if you take a teaspoon of sand and you pour it on the one side of the seesaw and you keep pouring it on and pouring it on and pouring it on, at some point, and it goes like this. And this is the debt, this is GDP. And in a reverse seesaw, all right, debt being up here means it's low. Okay, so debt is low, GDP is high. Flip it, it means GDP is low and debt is high. And we are flipping. All right, this is mission impossible to try and get it back because we really can't. So this means that people have to do something different because passive investing in stocks, while stocks may go up, I don't think in the near term, but maybe even in the near term, but certainly in the longer term, stocks will go higher because we see it in every country that devalues their currency and has a recession and fights it with debt, with printing money. All right, we're in that category now with 186% of debt to GDP when you include household debt of 18 trillion, public debt of 36 trillion. Bottom line. So in that case, stocks go up, but they don't keep pace with the debasement and devaluation in the purchasing power of your currency. The same stock market gains don't buy you the same that inflation gains would. It doesn't keep pace. So this is why, and I rarely do this. People that know me, I hate the sales side of this business. I hate going out and chasing down money. But I swear, this is a case now where it's become less about leaving my kids and grandkids more money and about helping as many people as I can, because this to me is the 40-year kind of crystallization, denouement, if you will, in terms of watching this whole secular trend play out every step of the way. And I'm thinking about doing a piece on reviewing my book from 2006 in which we talked about a lot of this stuff and kept saying someday, someday, and someday's here. And people ask why? Because the seesaw has flipped. We're in the debt black hole. And now things are starting to get ripped apart a little bit. So we go from there and we start with the comment. The world is out of balance. And this is back from the 60s when the world was pretty out of balance. Not too dissimilar to what it is today, just not with the same kind of murderous violence, but it was very tumultuous, very, volatile, no doubt. The world is like a seesaw out of balance. On one side, a big box of big rocks tilting its way. On the other side is the box and a bunch of us with teaspoons. And you keep putting teaspoons of sand. And all of a sudden, you reach those levels in the angles, in the math, and the physics, where the seesaw flips. And then you look around and you say, how'd that happen so fast? That's what people are saying right now. Like, is this for real? Why now? Is this because that's how fast it happens? And that's the whole theme behind the beginning of this year when I talked about the debt black hole. And that's something we've talked about before, but now that we've entered it across the event horizon, the macro event horizon.